Yo, 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 what's happening, ladies and gentlemen? What's going on? Poll doesn't reflect your feelings, bro. That's unfortunate, man. That is unfortunate. Good evening, ladies and gentlemen. Good evening. Excellent. Of course I did. Of course I noticed. Wicked. Yes, ladies and gentlemen, if you are new to the channel, be sure to Will Smith those likes. That's what it's all about, man. Whether it's staged or not. Be sure to Will Smith the likes, man. Cost you nothing. You ain't going to lose your academy ownership. You ain't going to get kicked out of nothing. All you got to do is like the stream. Welcome. That's your way of checking in, ladies and gentlemen. What is happening, guys? What's good? Who we got in the room today? Ryan Mack, what's happening? Gabriel, what's good? Sack Trades, what's going on, my brother? Andreas, thank you very much, man. Wicked. Amir, what is happening? Wicked, wicked, wicked. Orlando's in the house, yeah? Pozo, that's funny. Slap the like it's your... Madler from South Africa, what's happening, man? Welcome, 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 ladies and gentlemen. Okay, then, so let's get with the flavor, guys. Welcome to Traders Reality. Of course, if you don't know and you are new, my name is Tino, and I sit on streams all day, and I just talk about Bitcoin. I started this stream off back in January 2021, whilst I was waiting for a cup of tea to brew, and I wanted to try out my laptop. Could I stream on my laptop? And we are here where we are today, ladies and gentlemen. You know, all it is, break down Bitcoin's price action, try and understand the madness of Mr. Market Maker, and of course, try and enlighten you guys into improving the way you trade by having an understanding of the business model. So, if you are new, welcome aboard, guys. Let's have a conversation. All right, then. What on earth has Bitcoin been up to? Now, I've been a little bit preoccupied today. I've had to look after my daughter. She wasn't feeling too well, but of course, an hour after you realize that you've got to look after her, everything seems to be fine. She's got no temperature. She's happy as Larry. Never mind. But what have we got in front of us right now that's going to help us understand what to expect from Bitcoin? Okay, so we got the Miami conference coming. Happy days. People expect price to drop. People want price to go up. But a conference can't be the main reason as to why Bitcoin could drop further. The underlying issue is the following. What do you buy Bitcoin with? Simple. Dollars. Most of the transactions are accumulated through dollars. Now, when the value of the dollar is going up, Bitcoin naturally is going to come down. Now, when dollar is moving up, traders across the board, now I'm talking Wall Street traders, institutional funds, hedge funds, managers, you name it, they're going to seek safer, or should I say, more riskier options that they know about. Okay? They like to put it into currencies. They like to put it into certain assets that they know that they can exploit. Cryptocurrency trading is still a new thing. It's unregulated. These big boy players ain't going to get their billions into crypto just yet. So all of what you see with cryptocurrency is because of people involved in cryptocurrency. You ain't going to be ready for the wave of madness that will happen once the bigger players really and truly adopt the idea of trading cryptocurrency. Once they do start adding it to their portfolios, and we will see it move astronomically. Till that point, ladies and gentlemen, okay, we have to contend with the idea that when Bitcoin drops, dollar is moving up as a result of that. Okay? Now look at the disparity. Bitcoin trades against the dollar. Okay? So when dollar rises, you naturally expect Bitcoin to drop. Anything that trades against the US dollar will always drop when dollar is rising. So we're going to focus on this tonight, ladies and gentlemen, so that we can understand exactly what to expect from Bitcoin. Now, firstly, let's just look at the US dollar right now. I trade dollar yen. That's my baby. That's the currency pair that I stuck with for a good 6 years of my trading career. I didn't go anywhere else because I wanted to master the way she moves. Some people don't like it when I refer to coins and currency pairs as a narrative of female, but I guess that's the best way for me to talk about it. Anyways, cool. So just look at the US dollar right here against the Japanese yen. Now, why do I focus on dollar and yen? Because that's what it's all about, okay? We get everything from Asia. We buy everything from Asia because it's cheap. When dollar rises, yen has a problem with that. And that's better buck for the dollar because they can then buy more, okay, from Asia, quite simply, in terms of economics. But when the yen rises, it's a problem for dollar because then it costs more dollars to accumulate the same thing that you were buying when dollar was rising as such, okay? That's why we focus on dollar yen. Of course, you do have the dollar index in principle, which if we go over to that right now, this is going to put things into perspective. So, US dollar, here we go. Look at that. The dollar index is shooting up. As long as dollar is rising like this, ladies and gentlemen, do not expect any great moves by Bitcoin. Okay? You see, you may see the dollar index moving up like so. Bitcoin, in principle, hasn't really dropped down aggressively, but it's not exactly climbing up. What we want to see is we want to see Bitcoin hold this range whilst the dollar is doing its business. That's how we will know that there is true support behind Bitcoin. Now, when we do actually look at the US dollar, or let's just look at dollar yen for a second. If we zoom out on dollar yen, by the nature and the principle of the market maker in Forex, in order to achieve these positions in the chart, Mr. Market Maker is giving liquidity. He's providing it. Okay? At some point, we would naturally anticipate dollar to come back into this range because this is how dollar yen trades. Okay? It doesn't do this on a normal basis. Dollar yen's average daily range has doubled. It's near enough as close to pound yen, which they call the loonie. All right? Pound yen trades at roughly about 130 to 140 pips per day, even more. Now dollar yen is in the same boat? Nah, doesn't make sense. Okay? But in order for us to really understand what we can expect from Bitcoin, given that we've got the FOMC minutes coming out tomorrow, could dollar yen, be on its last attempt to the upside before it looks to come back down again? That's the question. If we split the chart, okay, put that there. We have dollar yen to the left, and we then have Bitcoin to the right, okay? Let's just understand the way things are working. Just look at this. Exactly the same structure, except Bitcoin's coming down, dollar's going up. So at what point are we going to see dollar yen actually make a recovery to the downside to come back into these previous zones of liquidity? And also, are we likely to see Bitcoin move up from that point? Remember, price is here, of course, but I don't really like to pay attention to price. Ultimately, it's all about movement for us. But what you can see Bitcoin doing, given that we've got the FOMC minutes and dollar has been moving up, Bitcoin's done a good job of holding within the psychological ranges. Okay? So here is the narrative. Can Bitcoin move up again? Well, let's just look at this. We do have these points in the chart, ladies and gentlemen, that we need to pay attention to. These are previous points in the chart that the market maker had previously gone long from. Okay? We know that they are imbalances in the chart. These are points where they aggressively moved price by triggering retail traders' shorts, liquidations of the longs, and of course, they're opening their trades at the same time. Okay? Oh, 4 hours. Sorry about that. Let me just bring that. Okay, yes, yeah, sorry. Forgive me. There's your boomer moment, ladies and gentlemen. Let me just pull up Bitcoin on the 4-hour time frame. Okay, here we go. Is it any different? Nah, it's not that much different, is it? Bitcoin coming down. Well, actually, quite frankly, Bitcoin is doing pretty well against dollar yen. But then when you pull up the dollar index, you kind of know where you stand with it. Okay? Yeah, there's more volatility in the dollar index itself. All right? So you can see that bright as day. Okay? Why on earth is this thing going so slow? I know why. Because I'm running that high block stuff. Anyways, let's get with price action. As I said to you a second ago, Bitcoin's doing a good job of holding within its psychological high and psychological low. It has rejected both of these ranges. So I'm going to flip over the chart to Bitcoin right here. And then we're going to expand the screen. Happy days. Cool. So there we are. Now, for the past 2 weeks, Bitcoin has done twice now. In the past 2 weeks, it has moved aggressively away from its psychological ranges at the start of the week. That was done here. And then, of course, over... it was last week. Okay. It was in this area here where they come back into it. Okay. We haven't had that movement yet. Maybe because of the FOMC, that's going to obviously take a narrative. They're going to keep an eye on what's going to be said in the FOMC, which is tomorrow, ladies and gentlemen, at, let me bring that up for you now. Tomorrow at 7 p.m. UK time. All right. So 7 p.m. UK time, the FOMC minutes is going to be released. Do not expect much activity in tomorrow's sessions. If there is, they're probably going to be spiking the highs, spiking the lows, and bringing price back into the fray. What's good about Bitcoin is it kind of already absorbs the idea of the FOMC minutes. So traders kind of go on a hold. Okay, the market seems to be holding. If you look at dollar index itself, it's just moving up non-stop. Okay. Now this isn't healthy for the dollar. All right. Dollar yen at 123.50. This isn't healthy. We need to see a retrace. And if this is going to be the retrace that sends dollar yen even higher, please expect some more downside behavior by Bitcoin. All right. Which would then justify Bitcoin coming down into these ranges. Now, earlier on today, I did say to you guys, when you come to the chart, focus on the points that are visible to you, okay, that are going to fit your day trading approach, okay? So, for example, you've got this area right here. Happy days. You've got, of course, the start of the New York session over here, which we had this green vector candle zone right there, which they've recovered. Done. And then, of course, we've got this area right here with Bitcoin, okay? So these are the 2 points in the chart that are quite important for Bitcoin. Why? Because firstly, if they break this point right here, they'll be breaking the structure of this build-up of price action in this area here. If they then release and go even lower into this area, okay, the main structure of this area here would take us down to this zone right here. And then, of course, if Bitcoin does decide to just collapse to the downside, then we will anticipate Bitcoin to end up in potentially this area here. Now, what I'm saying to you is to not pay attention to these areas until price starts making its way towards it. Okay? What do I mean by that? Simply this. Okay? Just take the idea of the way price moves. Okay? Check this out. Let's say you're here. Bitcoin comes down into this point, retraces back up. Comes down again, retraces back up, keeps on doing this behavior and slowly and progressively comes down towards these zones. Okay. Now they could get down here by Friday. They could get down here by tomorrow. Okay. We don't know what this FOMC is going to do, whether it's positive or negative. We're going to see an impact tomorrow. But what I'm trying to say to you right here, ladies and gentlemen, okay, is this. Each point that they drop, okay, notify it in your charts. So wherever they drop to, mark it off. Wherever they retrace to, mark it off. Okay? If they do drop to a certain point, project where you would expect the retrace to be. The best way for you to work that out, ladies and gentlemen, is to observe the vector candles that are appearing as price is dropping. Because we know at some point they're going to try and recover at least 50% of those vectors if they've been moving down aggressively. Okay? So if you see price drop in waves of 3, so 1 vector candle, 2 vector candle, 3, you can bet that they're going to try and recover some of this vector zone right here because it would be a finalization of the move to the downside. Okay? Ideally, what you want to try and do, guys, is when you see price dropping lower, pay attention to structures on the other side of the chart, because behind each structure that they break is a commitment of traders who could have stepped in again to go long or to go short. And depending on what there is more of in that zone is going to reflect as to whether or not price continues against that narrative. Because if they bring price back down into this area here, where traders had previously gone short from, they may be activating another opportunity to go long from that point, because those same traders in this area here will likely go short again in this zone right here, which is where we would expect price to bounce away from. Okay, how far it bounces back up is a different story. Now, let me tell you something, ladies and gentlemen, if you are new to this channel, you won't get signals from me. I'm going to tell you how it works, because the same thing happens over and over again. Go back in the charts. Based on what I'm saying, go back in the charts and tell me where you won't see the same thing happen over and over again. Okay, just look at this. We saw the big move to the upside, midweek reversal on Thursday, they dropped it. Come back again. Move to the upside, midweek reversal, they dropped it. Come back again, midweek reversal, and they dropped it. They do it all the time. And the whole point for you guys, in order for you to improve the way you trade, is to be able to train your eyes to see the pattern develop. You've got a good idea when you see price make a massive move to the upside, you know something is brewing. How can you move so aggressively to the upside and stop there? Oh, is that because of supply and demand? Nah, man. It's nothing to do with supply and demand. There is no such thing as supply and demand when there is one person that can allow us to open a trade, and that's Mr. Market Maker. When Mr. Market Maker doesn't want to make money, that's when supply and demand comes into play. Okay? How does that make sense, Tino? I do economics. The law of supply and demand says when price hits a massive high, it's because there's too much supply up there, no one's interested in buying. Wrong. It's because the market maker won't allow price to continue further because it wouldn't fit with his narrative of price moving up so that he can build his shorts at the highest point. Always ask yourself the question, why is it when price makes a mad move to the upside, it always ends up coming back down quite sharply? Okay? It's because the market maker, the liquidity provider, don't believe me? Google it. Okay? Binance, Bybit, Fomc, FTX, every single one of these exchanges has a liquidity provider. Why? Because we all want the luxury of being able to open a trade and make sure that there is someone on the other end to fulfill that obligation. Likewise, when we want to make a profit in our trading, where are we going to get that money from? Do you think Binance is going to pay you? No. FTX? No. Bybit? Nah. Why do you think they have fees? They have fees because your trades, the transactions on your trades, is what they charge you on. Now, there are millions of transactions happening at the same time. Do you think they're going to give you that money when you're in profit? No. It comes from Mr. Market Maker because he matches an order against yours. Because when you go long, he goes short, which would fit with the narrative of if the market maker moves price aggressively to the upside, okay, it means that he's preparing to come back into it. Why? Because he's caught the most amount of liquidity by the retail trader to the upside, because that's what the retail trader does. He buys when price is rising. He buys at a premium. Tell me, when was the last time you walked into a shop and said, I'd like to buy the most expensive thing that continuously increases in value because I think it's going to keep on going up in value anyway, and I'm going to try and sell it at a higher value? They'll look at you and be like, you're a madman. Yeah? Tell me, when you go and buy something, you want to try and aim to sell it at the cheapest price possible from the point where you actually brought it from. No, it doesn't make sense. So why does it make sense in the markets to buy when price is dropping as opposed to buy when price is rising? This is why retail traders get stung. They lose money because they are playing the game the wrong way. When you see price rising up, what do you see on Twitter? Bitcoin pumping. What do you see on crypto.com, Coinbase? Every single app out there about cryptocurrency tells you Bitcoin is up 5%. What are you going to do? Oh my God, I'm going to miss out on the opportunity for Bitcoin to go to 10%. How do you know it was going to go 10%, bro? Just because they told you it was 5% up. These are all little tactics that they use to get you to commit your money, because if you don't put your money into the game of trading, we don't have a marketplace. Market maker ain't going to trade against himself, is he? He ain't going to open a position against himself to only pay himself the same position that he opened against himself. Doesn't make sense, does it? Yeah? That's the basis of it all. This is the great paradigm. Sorry, this is the great paradox that happens in trading. People believe that when price is rising, it's because people are buying. But you can only buy when someone sells. And you can only sell when someone buys. That is true economics in the marketplace. From my experience and in my opinion, I'm the messenger. Don't shoot me. I've studied the way the game works. I've taken two schools of thought, both referring to market makers, combined them into one to create this system. Ladies and gentlemen, are you cool with that? Yeah? Are you cool with that? How do you become a market maker? You need liquidity, my friend. Yeah? You need liquidity to become a market maker, my friend. We're talking lots of liquidity. Could you go to Binance and say, hey, I'd like to provide you liquidity for a few of your coins? They'll look at you and be like, well, you know, what's your backing, bro? Like, listen, market makers are made up of conglomerates. We're talking money. Yeah? Big boy money. 50% of the volume that transacts on the exchanges is because of algorithmic trading. It's all done by algorithms. These algorithms are designed to fill orders. That's their purpose. And our goal in this channel is to help you to understand how the game works. Because if you don't understand the basis of the idea that when price is rising, it's because people are going long, but Mr. Market Maker's going short, you're going to have a problem. Which leads me over to this bad boy right here, the high block. The high block itself is the epitome of Mr. Market Maker's basis. You know, the reason why he exists today. Okay? To the upside of this chart right here, you can see liquidations. These are the assumed liquidations, but whether they are the true points in the chart where liquidations sit, okay, the idea is there, okay? Think about it. Above here is where the shorts are. The darker the color, so for example, the dark blue represents 25x traders. That means that they've had to put up a little bit more margin because they don't want to have too much leverage, okay? Down below, you can see a lighter color, which is the 50x traders. And then the orange is the 100x traders. Now, when you dive into this concept of liquidations itself, ladies and gentlemen, you kind of understand that price is irrelevant and all they care about is where the liquidity is at. So let's just look at this for a moment, okay? In this area here, there were $20 million worth of longs opened, okay? Down below, we've got the same $20 million there or thereabouts there, which is the 100x longs, okay? Look at how close that is. That's at $20 million worth of longs were opened at 45,955. The rough estimate of the liquidation sits at 45,700. So Bitcoin needs to drop $200 to wipe out the 100x traders on Binance. That's crazy. As we go down in the charts, you can see that the liquidation points for the the longs down here sits in this zone at 45.26. Okay, so in other words, the pink down here are the 25x traders. And all the market maker does is he sends price to these zones in the chart because that's where he's able to offset his positions by releasing the liquidity of the trader who's got his margin trapped in leverage. Again, be cautious with leverage, ladies and gentlemen. Leverage is your friend and it's also your enemy. The idea of leverage is you use it to capitalize on quick moves and then get out. That's the key thing about leverage. Scalping is for leverage traders. Come away from the idea of actually trying to swing trade or even hold crypto as a leveraged position. That's risky because you're only going to put more money to keep your trade alive when price isn't going in your direction. In other words, how deep are your pockets in comparison to the market maker's pockets? We can safely agree, okay, that Mr. Market Maker's pockets are pretty deep. And you do not want to be comparing your irrational behavior to the market maker's irrational behavior because he does not have any rationale about him. And he can be as irrational as he wants for as long as he wants, but you can't. That's the truth of trading. That's why people get liquidated. That's why you'll come to trading in 5 minutes, you'll be out. Done. Forgive me if I've just killed your dreams of trading, ladies and gentlemen, but that's the truth of trading. Leverage is a problem. That's why they're all going to start coming down on traders or in the crypto exchanges. And the first thing they're going to do is attack leverage. They did exactly the same in Forex. Now in Forex, there's only far and few companies that will offer a lot of leverage. Okay, max could be 500 to 1 and maybe 300 to 1. And even that is still a lot. Before it was 2,000 to 1, 1,500 to 1, 5,000 to 1. And they had to clamp down on that because people just kept on putting money into these exchanges. And they just weren't stopping, because if I can open a trade 5,000 to 1, okay, with $100, I'm going to keep doing that because I've got the idea that at one point I'm going to catch a trade that's going to work in my favor and I'm going to make a ton of money. Wrong. The wrong way to look at it, ladies and gentlemen. Okay? So, when you do decide to come to the charts and you're looking to place a trade, the first rule is this: based on your amount of leverage that you decide to use, okay, you've got to let Bitcoin move. All right. You see how the 100x traders on the high block just then only had their liquidation points $200 away. Well, I mean, come on, just look from today. All right. Look at how much Bitcoin dropped. Okay. From 46,764 all the way down to 45,420. Nearly a $1,300 drop. Those longs just got eaten alive right there. Okay, maybe the 50x traders got shaken out as well. 25x traders are probably worried right now because price keeps spiking up and down in this range. They're probably going to do what? Add to their margin. But their position may move lower. Okay? But unfortunately, Mr. Market Maker can also move it lower. Okay? What's good, Romeo? Are we good, ladies and gentlemen? Yeah? So the takeaway for this is this. If you're leverage trading, just be cautious. Try your hardest to not use leverage. I'm sorry if it goes against the narrative. If you're in to make quick money, you'll earn it quicker. You'll keep it safer by not using leverage. Your goal is execution. Look at it like this. If I say to you to go and use leverage with $1,000 and there's no risk management behind it and you just get excited with leverage itself, you're not going to last 5 minutes. But if I say to you, avoid using leverage, okay, or try and use a little bit, enough so you can manage the trade well and not get caught out in these $1,300 drops. If you're cool with that, then utilize and focus exclusively on execution. Because the end result is money. All right? You're not going to open a trade, okay? And then at the end of your trade, once it's closed, you're going to get a cup of tea. No, you're not. That would be a trader's dream for me. For every trade that I opened and it was correct, I'd earn myself a cup of tea. Happy days. But we're in the real world, ladies and gentlemen. At the end of each trade is a profit if the trade has been done correctly and you've caught the right move. So you know that you can make money once you've made the right move and you've caught the right move. So nature would say you have to focus on the moves as opposed to how much money you're trying to make. Be honest with yourself, ladies and gentlemen. Okay? If you come to the charts trying to work out how much you're going to win or make, you're a gambler. If you come to the charts understanding how much you could lose if it doesn't go in your favor, now you're thinking like a trader. Don't get me wrong. I have a goal. When I place a trade, I aim to try and at least make a certain amount. Okay? But the way I view it is, if I can see Bitcoin make a $200 to $300 move, I'm happy. I take my cash, done, repeat. Okay? I'm not saying I want Bitcoin to, if I open a long from here, I want Bitcoin to go all the way up to 48K because I've done it in my Binance and my Bybit calculator that says at 47,673 Bitcoin with my trade at 100x, I'm going to earn 3K. So 3,000 is in your mind right now. So you're going to hold on to this trade even if it's going lower and lower and lower and eating into your capital because you think that 3,000 is a great amount of money for you to take if this trade works in your favor. Wrong. You don't look at it like that. You ask yourself, okay then, how many trades can I open from this point and see a profit if it does decide to move up towards previous vector points? In other words, if you see things systematically and objectively, ladies and gentlemen, you're going to improve the chances of winning in this game. Come away from the idea of trying to make money whilst trying to make money. It's hard, isn't it? How can you not focus on making money whilst making money at the same time? It's one of those tricky things. Yeah? So, whilst we're doing this, I just need to have a look at the TR ratio. 8% of you are new to the stream. Welcome aboard, guys. Be sure to like and subscribe. 923 of you have voted, yet 527 of you have not even bothered Will Smithing the like button. 19% of you still don't know who Steve is. Steve is a relative of mine. He's a market maker. He hooks me up with a couple of plays, which I try and relay over to you guys. 25% of you think Bitcoin's going to go to 12K. Wow, that's madness. Could you imagine Bitcoin at 12K? And 47% of you have correctly selected that the stream won't finish in 30 minutes. You are the winners of the ratio, ladies and gentlemen. Mad love and respect to every single one of you. Okay? Cool. All right then. So, what can we expect from Bitcoin? Sorry I've taken 30 minutes to chew your head off, but I needed to put that into perspective because it's now these sort of situations where people are in trades where they've been sucked into the idea Bitcoin's moving up and 100K Bitcoin adoption everywhere you see it, but we've got a problem with the dollar. All right? So what can we expect? Listen. From now up until tomorrow, Bitcoin isn't really going to be doing much. It may even decide to do the following behavior over the coming sessions, okay? Just be careful, all right? The faster the move to the upside or to the downside could be, and it's before the FOMC, it could be a false play. If you're already in a trade and you're trying to scalp it, happy days to you. Make sure you pay yourself, okay? The structure of this range right here, ladies and gentlemen, when we zoom out in the charts, we know that this is a level 1 accumulation zone, okay? So Bitcoin does need to break out of this zone 48,232 in order for it to solidify the level 1 rise. Today, we see Bitcoin drop to the downside, and it's only come back into the same spot it was, which on the 4th of April, okay? So last night from Monday's false move to the downside and the reverse price back up, okay? There appears to be a lot of orders being accumulated in this zone. Are they getting ready to release Bitcoin to the downside? Now, listen to me clearly, all right? This is a level 1. Level 1 will still be valid if price even comes all the way down towards this point in the chart, okay? Why? Because this is where the peak is. Now, this is one of the W formations right here, okay? That's one of the W's. We also do have a bigger structure in the chart itself, okay? Which we could anticipate that Bitcoin right now is formulating the first pullback. So if Bitcoin breaks down lower, all right, we can anticipate Bitcoin to come down into this range right here, which would be consistent with the retrace level 1 for this bigger W formation. It would still be consistent for a retrace for this W formation. However, the deeper this correction goes, so if they accumulate from here and drop down even lower, okay, they cannot surpass this area here because it would invalidate this structure right here. But the same token, ladies and gentlemen, they can also build another one in this area. Okay, that's what can happen. Remember, the bigger picture itself right here, the W, is showing that we are expecting this retrace to continue. Okay, why? Because we do have vector points right here, and of course a couple of vectors in that range. But ideally, what I'm trying to say to you guys is this. If Bitcoin is going to break down, this is the first structure that they would need to break towards. If they break this point, fine, we would then naturally expect the 200 EMA to be the next point, which sits at the previous vector point right there, okay? At any point in this chart, ladies and gentlemen, okay, any point in this area here, they could accumulate and do another pattern and shift out and move back up. Remember that. We've got until the FOMC minutes tomorrow to wait to see if they're going to do that. tomorrow's FOMC news announcements could send price back to this area right here. They could actually formulate a pattern and then shift out if the news itself does say something positive, which could affect Bitcoin in a positive way and send price up, which in return would send the dollar index down. Okay? But this move by the index, the dollar index itself, it's not sustainable, man. There's going to be a breaking point with that. It's like we're approaching a bubble. We're getting ready to burst very shortly. And if you look at the S&P 500, okay, back when they had the subprime mortgage crisis. So if I show you this, look at this. The subprime mortgage crisis back in 2007, 2008. If I show that to you right now, here we go. Look what was going on in the subprime mortgage crisis. The markets were rising beautifully, okay? Then 2007 came, okay? Then they said there was a problem with the subprime mortgages. It drops, then comes up again, recovers that, and then they said, yep, we're defaulting on everything. Bang. Completely drop it down, okay? Right now, across the board, guys, dollar index rising up. You've got, of course, let's have a look at this. You've got the treasury yields itself. If you look at this, hold on a second. Let me do that. If we look at the yields themselves, look at that government bonds 10-year yield is shooting up. That tells you that they're not putting the money to the government, so traders aren't scared. What's going on? What is happening? Yields are moving up. They're not giving the money to the government. No interest. Look at that. 2.7%. Government is advertising to investors. Look, put your money with us, man. You're going to get 2.7% in the bonds. Yeah? No one's bothering with it. This is a problem. Okay? Tomorrow, FOMC could dictate what this next quarter is going to be like. All right? So I say it again, ladies and gentlemen. If you're going to try and understand what Bitcoin's going to do next, you wait until tomorrow, okay? Because they're going to keep price trading sideways. And that's going to be reflective across the board as well in cryptocurrency, okay? Cool. Last bit. Today I came up with these vector lists, okay? So a few coins that were moving, okay? And we just want to have a look at how they fared and what we can expect from them later on tonight in Asia. So, BNX seem to be trailing upwards still. You're going to hear the same thing right now. Okay? INJ sharply pulled back. You see that? From today's stream, we pulled up this coin. Please go and watch the last stream. Okay? They've pulled it back all the way. Okay? Be careful when you see these big pumps in altcoins, guys. This is what they're designed for. All right? Near. Coming straight back down into the recovery of the vectors. BSW, not really had that much activity today. Coty, it's done a good job of holding its gains, pulling back, still above the 50 EMA. That's a good sign. Okay. Cello, whatever. Completely recovered the green vector candle straight in towards the range weekly low. Complete recovery of the range. Again, ladies and gentlemen, if there's something you take away from this stream, it's this, okay? On this altcoins boss list, which you can get if you join the Discord, okay? The Discord's free of charge. Take the altcoins that are showing strength, so the ones that are trading positive and that have made a bigger gain in the day. If they are showing this example right here, you can expect retraces to pass through. You're looking for the following. You're looking for 1, 2, 3 hits to the high. That's what you're looking for. If you see one blue vector candle and then a small green vector candle, they're not finished with their move up. You want to see an explosive move happen in the chart, which is the market maker preparing to run his shorts at the highest possible point because Mr. Retail Trader buys at a premium. Okay? So, ladies and gentlemen, I say this to you. Coming into tonight's session, we might not get that much activity from Bitcoin, okay? Given that we do have the FOMC minutes coming out. Please just avoid trading these marginal scenarios, okay? Avoid trading them. Wait until tomorrow. Let the news come out. Let them absorb it because you can bet after the chaotic price action, All right? They're going to move up or they're going to move down. There will always be a retrace in the chart. And that, ladies and gentlemen, is what you trade, the retrace. If you are new to the channel, guys, be sure to like and subscribe because I will be going live again tomorrow, 2 p.m. I'm going to try and go live again for the FOMC like we did last time so we can get real-time activity from Bitcoin, dollar yen, gold, and all of the other mad assets across this game, okay? Again, ladies and gentlemen, it's a pleasure to serve you all and talk you through this mad game that we call trading. Have yourself a wonderful evening. Take care of yourselves. Peace.